Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hey, good afternoon, everyone. Hot one out in Southern California here today. Ken Shreve with you. Welcome to another edition of Breakout Investing, now 5 days a week on TFNN from 3 to 4 Eastern. David White, who used to be on at 3, is now on at 2. Monday, Wednesday, and Friday for the rest of this month, and then starting in August, thereabouts, he'll be going 5 days a week as well from 2 to 3 Eastern. But Breakout Investing every day now from 3 to 4. Thanks very much for tuning in. 877-927-6648. That's the number to use to get through. You can get my show as a podcast on iTunes. I always remind you about that. So if you miss a show, just head over to iTunes, do a search for Breakout Investing, TFNN, Ken Shreve, something like that, and you'll be able to get the podcast that way. And don't forget, listening to TFNN programming on your smartphone is very easy. Just type in TFNN.mobi, TFNN.mobi in your smartphone browser, and you can listen to the stream that way as well. Taking a walk, out for a run, whatever you're doing. And if you want to look at charts right along live with me, you can do that on Tiger TV, right on the homepage of TFNN.com. The show is carried live on Channel 1 and archived on Channel 13, and use your handheld device to watch Tiger TV as well. All right, Fed minutes come out about an hour ago. I had a feeling the market was going to sort of ho-hum it. We're in a very iffy time for the market here. In recent days, certainly been talking about the buy signal that we got in the major averages. A lot of false starts for the market recently. It's not uncommon for that to happen when you have a lot of uncertainty out there. But, pretty good buy signal for the market on June 29th. We had NASDAQ composite up about 3%, S&P 500 up about 2.5% on that day, the Dow up 2%. So broad-based strength. It looked like it was going to have some staying power, and then boom, you get sellers come into the market. And it's happening again today. So I wanted to start by looking at a chart of the U.S. dollar index, because that is showing noteworthy action today. U.S. dollar index at last check was recently trading around 83.56. 83.56. And you can see the swing point here of 83.54. So U.S. dollar index trying to muster up a breakout here. And, again, this is a problem for the market. Strength in the dollar. And you have to think, what is there really good reason for investors around the world to be investing in the euro at this point? Is there any surprise that the euro could remain out of favor for the foreseeable future? I don't think anybody would be surprised to see that. And as long as the euro is acting as weak as it is, the argument for the U.S. dollar continuing to be in an uptrend is pretty good, and that could be problematic for the stock market. So I was on offense for a short amount of time when I saw that buy signal. Now playing defense again, and raising some cash here, getting out of the market's way. I use a top-down approach. As an investor, you're either bottoms up or you're top-down. If you're a bottom-up investor, you're really not paying much attention to really anything but just looking at good stocks to buy, whether they're blue chip stocks, mid cap, large cap, small cap. You're just looking at a stock with a good balance sheet, good fundamentals, not really paying attention to what the broad market is doing. Top down investors like myself, well, we really pay attention to what the market itself is doing, looking for signs of accumulation in the major averages, buying stocks during market uptrends, raising cash during downtrends, and protecting capital. So being a top down investor, I'm really paying attention to negative action in the major averages at this point, and for that reason, I'm not really liking what I'm seeing. Still have some long exposure to the market, but not much. I have a pretty big cash position here, and when I see all of the negative action in growth stocks. I write a growth stocks newsletter at TFNN, Ultimate Growth Stocks, and when you're invested in growth stocks, you need to handle them carefully, because they can outperform materially in up markets, and they can also underperform materially in down markets. So have to handle them carefully. And right now, now it is just not a good environment for growth stocks in general, and the charts unequivocally tell me that right now. So starting off with a look at the U.S. dollar index, again, that is up about 0.2% today, 83.56, trading slightly above a swing point of 83.54. Now, the one thing I will say about the U.S. dollar index is you can see it's been a pretty sharp move up off the bottom, about what do we got, seven days in a row where it has moved sharply off its bottom. I wouldn't be surprised to see the U.S. dollar index here start to trail off a little bit. Wouldn't be surprised to see some selling pressure. Anytime you get a big move up off the bottom like that, it's not uncommon to see a little bit of a shakeout, which unfortunately can often pave the way for an eventual upside breakout. But after the big move the dollar has made over the past 7 trading sessions, wouldn't be surprised to see a little bit of softness in coming days. Hopefully what we see here is a failed breakout, but it's just too early to say at this point if that scenario is going to play out. Let's check in on the NASDAQ composite, then we'll talk about the Fed minutes here. The NASDAQ composite, once again, trading near its session low, down close to 27 points, 0.9% to 28.75. It is now below its 50-day moving average. That is a significant occurrence here. So I'm hoping that the NASDAQ composite would be able to hold this support level. Volume right now, not overwhelming, tracking a little bit lighter than what we saw yesterday on Tuesday. NASDAQ volume on Tuesday was pretty much average at 1.67 billion shares. So right now NASDAQ volume on pace to come in just a little bit lighter than that. So the tech index may be able to avoid a distribution day or a higher volume decline. Let's check in on the S&P 500 here. See that the S&P 500 briefly fell below its 50-day moving average today. It's trading right above the line. It is down about about 4 points or so, 0.3% to 1338. 1338. Its 50-day moving average is at 1336. So just a couple of points above this key support level. Really do or die time for the major averages at this point. Again, when I take a step back and look at the big picture, crummy action in growth stocks. That's really the main area of the market that I look at. Talked about some Dow stocks yesterday holding up well, the AT&Ts, the Verizons, the Walmarts. Even a name like Coca-Cola. But so there are stocks bucking the trend, safe havens, if you will. But when there's this much selling in the market, it tends to eventually take everything down with it. So no need to be trying to make money in a downtrending market. So both the NASDAQ composite and S&P 500 just trading right around their 50-day moving averages today. So the Fed minutes come out about an hour and 15 minutes ago. The Fed minutes used to carry significance, but now that the Fed is having their press conference after these meetings, it sort of diminishes a little bit. It's sort of a rehash of what was said during the press conference. So market kind of ho-hummed what it saw in the minutes. What we found out is that 4 Fed officials thought that more asset purchases would be necessary, but several others said more action could be warranted if economic conditions deteriorated. So there's still the majority of Fed members, want to see economic conditions deteriorate further. You really have to wonder at this point. I mean, the Fed is almost out of bullets here. I mean, at the end of this year, they extended Operation Twist till the end of the year. At the end of this year, they're not going to have any more short-term securities to sell. So they're going to have to come up with something. But really, what has QE1, QE2, interest rates are low, but is it fixing this economy? Is it fixing the jobs market? I think the bottom line is that the recent negative price action in the major averages is the market's way of it's probably doing 2 things. It's probably pricing in a weaker than expected second quarter earnings season. We had more pre-announcements today. H.H. Gregg, an electronics retailer, really weak negative pre-announcement. That's hurting the electronics retailers. So you've got this very suspect second quarter earnings season. The results may not be good, may be worse than expected, so second quarter earnings season definitely definitely a problem. And then, of course, the economy. With the jobs market the way it is, 3 straight months of dismal job growth, and the market acting the way it is now is probably pricing in the fact that we're probably going to continue to see sluggish job growth, stubbornly high unemployment rate, and I think the Fed realizes that as well. So double-dip recession, I don't know. I don't really know what the definition of a recession is, but it looks at this point like there's going to be continued softness in the second half of the year, perhaps a little worse than initially anticipated. At the end of the two-day Fed meeting on June 20th, remember the Fed did lower their economic forecast. They extended Operation Twist, like I said, until the end of the year. They said they're going to continue to watch the labor market pretty closely. So a lot of headwinds out there, strong dollar being one of them. Definitely a lot of trepidation over the second quarter earnings season, which really hasn't started yet. We saw lukewarm results from Alcoa yesterday. But again, a lot of negative announcements that we've talked about in recent days. Seagate, the hard disk drive maker. Informatica, enterprise software company. And let's just check in on HH Gregg. That's ticker HGG. And this stock is down 36% today. I mean, just unbelievable carnage. The percentage declines that you're seeing in a lot of these stocks is just really, really unsettling. But HH Gregg down 36% today to $7.38. Is this an industry group leader? No, absolutely not. But it is a stock that lowered their guidance significantly, and it is weighing on the home electronics retailers. Like I said. Taking a look at gold today, down $4.10, 0.3% to $15.75.70 an ounce. You'd think that with money coming out of stocks, maybe gold would be a safe haven trade, but that's not the case at all. Spider Gold Trust still a very risky buy here, in my opinion, just because of its very weak chart that it's currently showing. GLD right now up 46 cents, 0.3% to 152.61. Its 50-day moving average at 154.76 still looks like a fairly significant resistance level. So a new uptrend could start in the GLD, but it's going to need a bunch of upside volume really to confirm that new uptrend. And definitely been seeing a lot more selling than buying in the GLD recently. Taking a look at crude oil, up 2.3% today to $85.91 a barrel. Interesting as well that the market is acting as poorly as it is. We've got lower gas prices at the pump finally. Really no signs that oil is going to be headed meaningfully higher anytime soon. It seems to be bouncing back and forth between that 85, 83, 86 bucks a barrel. But earlier today we had crude inventory data. Crude stocks fell by almost 4.7 million barrels last week, after falling 4.3 million barrels the prior week. Mentioned the term distribution in the market. We've seen some of it in recent days. Not an overwhelming amount, but today we could end up having distribution again. That's when indexes stage meaningful percentage declines where volume comes in higher than the day before. Again, it's been mostly contained up to this point. Headed into today, we had 2 higher volume declines in the NASDAQ and NYSE Composite. Just one for the S&P 500. Again, we'll see what volume looks like. Right now tracking a little bit lower on the NASDAQ, a little bit higher on the NYSE indices. So not a great day taking shape again. Playing defense here, getting out of the market's way doesn't make sense. Buying stocks in a downtrending market. Headed into the first break. We'll be right back, folks. Ken Shreve, Breakout Investing.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing, now 5 days a week on TFNN from 3 to 4 Eastern. 877-927-6648. That's the number to use if you want to ask a question about an individual stock. What is going on with this market? Why? How can a pretty bullish buy signal flashed on June 29th? How could things turn so negative so quickly? So let's talk about this market. 877-927-6648. With the ugly action in the major averages, with the ugly action in the vast majority of growth stocks that I'm looking at in my screens, many breaking through their 50-day moving averages, look like they're ready to base and consolidate gains for a while. It might make sense to, consider going short the market. Now, I don't short individual stocks with my Ultimate Growth Stocks newsletter and model portfolio, but I'm not averse to buying a short index short ETF just to have the ability to make some money in a downtrending market. But I wanted to put up a chart of the ProShares Short QQQ fund. That's ticker PSQ. And you'll see that right now the fund is up 0.8% today to 27.12, but it's not clear to me that this fund has started a new uptrend yet, which is why I am not ready to buy it. I've been raising cash, getting out of the market's way here. locking in profits in some cases, keeping losses small in other cases. But PSQ is not quite ready here. I drew a descending trend line here. This one's going to need to get above that 2750 level, and I'm also going to need to see some meaningful signs of accumulation in this fund before I'm convinced it's ready to head higher. And for that matter, there's a short S&P 500 index ETF as well, the ProShares short S&P 500, and that is really in the same situation as PSQ. This one is going to, it's underneath its 50-day moving average. First of all, at 37.34, the fund was recently trading around 37.07. So it's still a little ways underneath its 50-day moving average, and I'm going to need to see a breakout over a descending trend line in this name as well. And the RWM, which is the ProShares short Russell 2000, very similar. All three have very similar charts, but not fully ready to commit to being short this market. Still in a whipsaw back and forth environment, and I'm going to continue to hold on to some long exposure here and see how the market looks tomorrow. All right. Let's move on here. Talk about some story stocks today. Shares of Facebook underperforming, under a lot of pressure today. Broke through some near-term support here today, trading around $30.78, down 2.2%. News on Facebook today, they're going to collaborate with NBC on coverage for the upcoming Olympic Games in London. They start July 27th, so NBC going to be implementing some social media on their Olympic coverage. No financial benefit here for Facebook, just its brand getting more exposure for its brand. Facebook not looking good here. One of several internet stocks that you just are not buyable right now. There's no real signs of institutional buying. Let's check in on shares of Zillow. I've been talking about Zillow a lot. Lately, it's a good base setting up. Looks like it could be forming a handle area here in a bullish cup with handle base. And, in a market environment where new money is coming in from the sidelines, you're in a confirmed uptrend and things are looking pretty good. Growth managers are actually, putting money to work in growth stocks, not selling. A chart like Zillow usually can work well and deliver a nice breakout and nice outperformance. So, it's not out of the question that this thing could eventually break out over $40 a share. It's not a bad technical setup as well, but just not likely it's going to work in this type of environment where sellers seem to be gaining the upper hand every day. So Zillow is still holding above its 50-day moving average at $37. Stock today down 2.4% to $37.92. So breakout candidate, yes, but probably not in this type of market environment. Let's check in on CF Industries as well. Another decent technical setup here. Another stock that is forming a bullish cup with handle chart pattern. CF Industries is actually outperforming today, up 1.6% to $194 a share. So not out of the question that you could see a breakout in this name as well. Let's go ahead and take a look at a weekly chart for CF Industries, and we'll see actually a nice looking cup with handle base here. You can see the consolidation started several weeks ago, forming a little handle area. Could see a breakout soon over 202.33. Remember, today the USDA cut its corn crop forecast by 12% to almost 13 billion bushels, so maybe investors are interpreting that as good news for CF Industries and other fertilizer makers. All right, folks, we'll be right back. Ken Shreve, Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing on TFNN. Talking about Zillow's technical setup. Let's just go back and take a quick look at Zillow. See that shares are underperforming today, down 2.5% to 37.88, but still holding above its 50-day moving average. Chart is still intact compared to most other growth stocks that have taken out key support levels this week, but let's also take a look at LinkedIn. LinkedIn was another name that, many still like this stock, like the growth prospects, but, a stock that, could be in the process of breaking down here. Can't leave it for dead yet. It is attracting some buying interest today. Shares up 1.1% to $100.60, but below its 50-day moving average here at $103 a share. So not the strongest of stocks, but could, at some point see a breakout here over 110. But again, when you're talking technical breakouts in a market, there's really only one thing. Well, there's a few things that need to be in place for technical breakouts to work. You need to have money going to work in the market, not coming out of the market. Certainly, it's been coming out of the market in recent days, so that's going to be a tough environment for breakouts to succeed. And the main fuel for technical breakouts are institutional buyers, mutual funds, banks, insurance companies, people that are buying a lot of shares, and they're going to do it at some point. Clearly, it's not happening now. That is a key part of my buying methodology for my Ultimate Growth Stocks model portfolio. I don't always buy technical breakouts, but when I see a high-quality growth name breaking out, volume expanding, great earnings and sales growth, a new product, new service that's driving growth, I know that's the recipe for not only outperformance, but big-time outperformance. But unfortunately, it's just not. We're not in that type of market right now. I'm still optimistic we're going to get a buy signal sometime between now and the end of the year that's going to work. And frankly, the buy signal that we got on June 29th, it's not like this rally is completely dead in the water here. It's close to being dead in the water, but not quite. You can't completely throw in the towel here. Nasdaq Composite right now down 0.8% to 2879. It's trading below its 50-day moving average, so this index is going to need more time to repair itself. Let's check in on the S&P 500 again. We'll see that it is just right at its 50-day moving average. So it looks to me like there's probably a pretty good chance, even if we do see a dead cat bounce over the next day or two, probably a pretty good chance that the S&P 500 is eventually going to undercut its 50-day. That could unleash some more selling here. So, and again, my take is that the market is probably pricing in slower than expected economic growth in the second half of the year. It's also probably pricing in quickly some upcoming bad news when it comes to corporate earnings reports overall in the second quarter. So anyway, let's take a look at some other names that I still like here. I think they have a chance of outperforming. A new issue called Spirit Airlines. Nice chart here. Base building stock, not buyable right now, but you have to respect its price performance here. Spirit Airlines is they operate flights to and from South Florida. They also have service in the Northeast, the Caribbean, and Latin America. Highly profitable airline here. This is what is compelling. Obviously, lower gas prices are good news. Lower oil prices, I should say, and gas prices for that matter are good news for the airlines. But Spirit came public last year in May 2011, and when you look back in recent quarters, you see top-line growth, sales growth ranging from 27% to 56%. I'm talking year-over-year growth here. Robust earnings growth as well. The earnings growth decelerating a little bit in recent quarters, but when you look at this year, they're expected to earn $1.94 a share. That compares to $1.39 last year. That's a 40% increase. Looking out into 2013, they're expected to grow annual earnings by 28% to $2.49 a share. Fast-growing airline, relatively cheap valuation-wise, selling at 15 times trailing earnings. Like this name a lot. When new money starts to come in from the sidelines, Spirit Airlines, not buyable now, but this is one that you want to keep an eye on for outperformance going forward. Certainly, out of all the airlines to choose from, many with very damaged balance sheets, many having a hard time making money, makes sense to look at a highly profitable one like Spirit Airlines. Let's take a look at another stock acting pretty well here, Gartner Group. Ticker easy to remember here, IT. Gartner Group is not a big company, but a mid-cap company with a market cap of $4.3 billion. They provide information technology, market research, consulting services all around the world. And I really like the way Gartner Group is trading. It's almost trading like a safe haven stock here. Big move last week for Gartner Group stock today outperforming again, up 34 cents to 45.75. That's a daily chart. Let's switch over, take a look at the weekly chart for Gartner Group, and this is just very bullish trading here. This one also has the potential to work here. I'm hesitant to put money to work in any stock. I don't care if they're stocks that are acting well, continuing to show relative price strength in a weak tape. Certainly not looking at the weak price performers here, but a name like Gartner Group has my attention. Very strong technical setup here. Again, you can see the big move last week, and it is not giving up any ground at all so far this week. This is a name I'm watching along with Spirit Airlines as one that could have more gas left in the tank. Check in on some decliners here. The damage done in the market yesterday and today, definitely disturbing. Really not looking to put money to work in an environment where you're seeing a lot of broken stock charts, and really there are too many out there to count. Several growth names have been acting weak for some time. Some that were showing relative price strength, showing some potential, they've broken down as well. Michael Kors, still a lot of big fans of this stock. The stock's still in an early stage of growth. They're going to probably be able to grow earnings by at least 25% over the next couple of years, but stock's really getting hit hard today, down 5.1% to $40.44. I'd be careful trying to catch the stock on sale here, especially since it undercut its 50-day moving average. Really looking like a tired stock here. Could have its day in the sun again, especially if they continue to report the earnings and sales growth that they've been reporting in recent quarters, but right now looks like damaged goods to me. I would avoid it. Also been talking about the restaurant stocks lately. Chipotle Mexican Grill, trying to hold above its 200-day moving average. What you have here is a base building stock, but I mean the technical damage done to Chipotle has been significant. No question about it. Really started to base back in April earlier this year, and nothing but selling pressure. This is what institutional selling looks like in a stock, and you have to wonder when institutions start dumping. I realize that sometimes they are not the smart money, but the concern here from what the chart is saying is that you could start to see some slowing growth at Chipotle. We'll see what the company's earnings report looks like, but it is down today, not by much, $1.30, 0.3% to 378.59, but a broken stock where I would expect there's a pretty serious resistance now at the 401 price level, which is where its 50-day moving average is. Check in on Biogen IDEC. We should be hearing something relatively soon from the FDA about its oral MS pill BG12. Very favorable clinical data on BG12 in recent months, so expectations are high that this drug will be approved. Biogen still looking pretty good here, holding above its 50-day moving average. Not viable here. If it comes down to that 136, 137 price level and bounces off the 50-day with volume, there you may have an opportunity to at least start a small position. But stock is down 1.4% today. Volume looks pretty light to 141.71. So watching Biogen and approval at some point from the FDA for its oral MS pill BG12. I thought I heard that it was going to be coming sometime towards the end of the summer. Maybe it's later this year, but Biogen continuing to act pretty well here. And let's check in on MasterCard. MasterCard, another former leader that's really looks like it's in trouble here. Fell below its 50-day moving average for the first time in a long time in May. Tried to rally back above the line, and then 4 days in a row of losses here. Trading up near its session high, but still down $1.78 to 418.47. It and Visa were under quite a bit of pressure earlier this week. It was either Tuesday or Monday. An analyst came out and said, You know what? This slowing economic growth around the world is eventually going to hurt consumer spending, and he came out with a bearish call on MasterCard and Visa. I believe he downgraded both stocks to sell from neutral. So MasterCard in a tough spot here, not really at a buy point in my opinion. Visa looking equally weak, although to Visa's credit, it is holding above its 50-day moving average here. So that is compelling. Again, something that most growth stocks can't say at this point. Again, most growth names are now below support, and the thinking when a growth stock breaks below its 50-day moving average, well, the main message is that it's not ready to move yet. If you had a good technical setup and the stock breaks below its 50-day moving average, it's the market's way of saying, you know, I'm ready to base, I'm ready to consolidate for a while. After I'm done consolidating, I may attempt to break out at some point down the line, but you know, so many names underneath their 50-day lines at this point. That's another way the market can tell you to kind of, you know, be defensive, be conservative. I tweeted something yesterday. I just said, you know, it's pretty simple. I try to keep things simple, try to keep things non-complicated when I'm writing a newsletter and managing a model portfolio. It's really about preserving capital at this point and protecting gains. Preserving capital, protecting gains. If you're doing that, you're going to live to see another day. And you know, just pick your spots. Pick your spots in a volatile market. Don't try to make money in a downtrending market. It's very difficult to do. Like I said, it's still not an easy market to go short here. I mean, there are a lot of people. It might seem real easy to go short here. You have leaders acting as poorly as they are. But again, I showed you some of those index short ETFs where, you know, the technical pictures of each tell me that, you know, it's not real clear at this point that uptrends will be able to sustain themselves. So I think cash is okay here. Maybe just a little bit of long exposure, which I still have, but certainly not a market where you can be aggressive with new buys. How about shares of SourceFire? Remember SourceFire? This is a stock. A lot of growth guys were keen on this one, but SourceFire, another stock that has just been under a tremendous amount of pressure, working on 6 days in a row. It was a it was a $51 stock, $52 stock not that long ago. Shares trading around 43.04, down another 4.9% today. Hard to say. You know, what you have here is some institutional selling, probably growth fund managers that made nice profits in this thing between February and May. It was a big market leader. Finally, you know, profit taking been going on in a while in this name. Fundamentals still look good here. Technicals look very weak. I do not think the stock is a buy here right now. But SourceFire is a maker of network security hardware and software, and you know, a company with you look at recent earnings and sales growth, and there's a lot to like. Accelerating sales growth in recent quarters, excellent growth prospects, but it is a high multiple stock. So you know, these high multiple stocks are definitely vulnerable in the market environment that we're in right now. Also want to take a look at some of these some safe haven retail stocks today. Let's first start by looking at shares of Home Depot. You know, it's been clinging near highs. Definitely one of the strongest performers in the Dow. Home Depot today down 1% to 51.67. Still holding above its 50-day moving average at 50.71. Wanted to take a look at a weekly chart for Home Depot because this is you know, definitely a good example of a cup with handle pattern taking shape here. Again, these cup with handle patterns, they tend to work the best when the market goes through a correction, a pullback, and then it starts to rally back and you get bona fide follow through. There are pretty clear, unequivocal signs that new money is coming in from the sidelines. This pattern here can yield pretty big gains. Now, 12 years I spent at Investors Business Daily. I learned how to recognize the cup with handle. It's a term coined by Bill O'Neill over at IBD. He's seen this pattern repeat over and over again during bull markets. Home Depot right now, the swing point is 53.28. In the handle area right now, again, not likely it's going to break out in heavy volume, but one to watch because it's definitely showing relative price strength, and could work if this pullback lasts less than I think it might. So Home Depot definitely one to watch in the Dow. One more break coming up. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Last segment of Breakout Investing on TFNN. Ken Shreve with you. And another reminder, Breakout Investing now 5 days a week on TFNN from 3 to 4 Eastern. So Anytime you want to give me a call, feel free to do so. 877-927-6648. That is the number to use, toll-free to get through. Well, looky here. NASDAQ Composite trying to rally into the close here, up near its session high. It's now down 10 points. 0.3%, 0.4%. To 28.92, back above its 50-day moving average. Very interesting. Let's take a look at the S&P 500. I'm sure it is rallying as well here. It is up 2 points, 0.1% to 1333. Fell below its 50-day moving average at 1336 for just a little while today, but at 1343. Now about 7 points above its 50-day moving average. So have to call it a bullish session here. We got 5 minutes left to go. Indices rallied well off their lows. So we will see what happens. I currently have only three long positions on for my Ultimate Growth Stocks model portfolio. I am not short the market. It is tempting to go short the market here. I am not short yet, so I have 3 long positions. If you do want to check out a 30-day free trial, 30 days free to Ultimate Growth Stocks, you can do that at TFNN.com, right on the homepage carousel there. Another way to do it is you can go to KenShreve.com. That'll take you to directly to my order page at TFNN.com. Click on the green banner, and you get 30 days free of Ultimate Growth Stocks, and get a feel for how I navigate volatile markets, and hopefully you'll take that offer up. All right, checking in on some more stocks here. Zumiez is a specialty retailer that I really like, a well-run company, but another leader totally breaking down here. Just breaking down here. It is not on sale, not by any stretch. A big wave of institutional selling in the stock today, not rallying back, with the market down 5.8% to 35.10. Had been trying to hold its 50-day moving average earlier this week, but a big, heavy volume decline. Again, another example where institutional investors could be finally ready to start locking in some profits in this specialty retailer. Zumiez audience, basically they cater to the skateboarding, surfing, snowboarding crowd, bicycle, motocross. Earlier this month, same-store sales growth outstanding at Zumiez, up 8.2% for the month of June, and a company that has delivered very nice earnings in recent quarters. And I think they'll be able to do it, but it's about expectations at this point. Will this company be able to maintain its rapid rate of growth? Possible that they will be able to do it, but the technicals right now very, very weak in Zumiez. Let's also take a look at another well-run retailer, stock that has made a big price move in recent months. Another one that is looking very tired here. Ulta used to be called Ulta Salon Cosmetics and Fragrance. It is now called Ulta Beauty. They, as its name indicates, they operate beauty stores in 43 states, about 450, maybe 500 stores at this point. Still growing nicely. Stock is down 2.3% today to 91, trying to hold its 50-day moving average here. This is not a breakout candidate, not a stock that I'm expecting any meaningful outperformance going forward. It has made an incredible price run in recent months. Sometimes you have to take a step back and ask yourself the question, has the big money already been made in a stock? That could be the case with Ulta Beauty. All right, folks, don't forget economic data tomorrow. We've got weekly jobless claims. We'll be watching that. Friday, we've got the producer price index, latest reading on wholesale prices. Also, earnings from a couple of key financials, JP Morgan Chase and Wells Fargo on Friday. Will that be a catalyst for the market? We will see. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. See you back here tomorrow at 3 Eastern.